Welcome to the Options Moneymaker Q&A session. Today is Wednesday, May 13th, 2020. It's 7 p.m. Eastern. I'm Mark Dannenberg. Aaron Rumley and Michael Kastner are with me this evening also. Before we get to Q&A, which is your opportunity to ask questions, let me just make sure everybody kind of understands what we do here. If this is your first Q&A, if you're relatively new to Options Moneymaker, just want to make sure you understand the purpose of this session. It really is to help you learn to trade so that you are capable of trading to earn. So learn to trade, trade to earn. And there's a lot of learning that takes place first in order for you to be successful. And we are here to help support you in that learning mission that you have, that objective you have. We talk about our profit flow analytics charts for identifying trends. We use those every day in the live trading room. We talk about the Cycle Finder Plus extensively in the live trading room. It's one of our primary indicators for taking new trades. The master class, which is part of our Options Moneymaker offering, went deeply into the Cycle Finder Plus as well as the profit flow analytics. So those are all the charts that are provided to us for any trader by New Cycle Trading and Analytics. If you have questions about those charts, questions about the signals, questions about how to act on those signals, how to interpret the signals, we're happy to help you answer those questions as much as possible here this evening. We set aside our time every couple of weeks to help you learn. We know that when you're learning, there are questions that come up and there's not always a good forum for you to be able to ask that question. So we make ourselves available every couple of weeks. The live trading room is for real-time trading and support. Michael Kastner is the primary host of our live trading room, does a phenomenal job of literally guiding you through step by step the entry of a trade, why that trade's a good trade, why that trade's not a good trade, how to read the technical signals. And one of the big value adds for the live trading room is Michael has a wealth of experience. He's been doing this over 30 years, and he draws on his knowledge and experience to interpret the signals and help you make the best trading decisions possible. Profit Builder Plus is facilitated by Aaron Rumley. It's for options education. It's for folks who really are interested in learning more and more about options education. There's also an advanced spread trading course. I'm going to mention it here in just a moment, which gets into like a level 2 type of training for options education. And then, of course, we have futures trading education, where primarily you learn the risk and reward of futures and how to make that part of your trading curriculum. And then, if anybody's interested, we offer one-on-one coaching for intensive immersion in learning how to trade. Generally, those are once-a-week sessions, but it can be customized to whatever you are interested in doing in order to learn. We also are here to represent and respond on behalf of New Cycle Trading and Analytics. They are the creators of the charts, the Profit Flow Analytics charts, and the Cycle Finder Plus. They also have created a forum for traders at traders.newcycletrading.com, which is a place that you can just stop in and read comments, post questions, post opinions about the market, and basically connect with other traders. So questions you have about what we do, we're here to help you answer those questions. Now, one of the questions that we get frequently, especially from limited time traders, meaning you don't have a lot of time to trade, but you'd like to participate in the market, is how could I, on a regular basis, participate? So one of the things that we have focused on in our live trading room is what we refer to as daily crosses. Now, what that means is the Cycle Finder Plus is one of the primary indicators that we use to identify a good entry. And we look at the open of market at any stock or index in our watch list that has experienced a cross, meaning that the lead line has crossed over the basis line. And if you're not familiar with the Cycle Finder Plus, it's really simply a technical indicator that has a strong performance of when it crosses, when one line crosses the other line, it's a good strong indication of entering into a new trade. So just to kind of give you some perspective, we started tracking the daily crosses February 24th. February 24th through May 13th today, there have been 107 daily crosses on the stocks and indexes in our watch list. So we're tracking stocks and we're tracking indexes, NDX, which is the NASDAQ 100, and SPX, which is the S&P 500. And in addition to that, the stocks that we're tracking are Amazon, Booking, Google, Tesla, Shopify, and Aaron will tell me if I missed one. But there have been 107 daily crosses on those stocks and indexes in our watch list. 95 of those entries have shown a profit and 12 of them have been losing trades. So that's a really strong win-loss ratio from just simply monitoring what we do, monitoring the market at the beginning of the market, literally in the first minute of the market. When you see a daily cross, you open your position, you buy to open a call or you buy to open a put. You set a closing order based on some criteria that we provide, profit targets, and our profit targets are all based on historical data back through January of 2019. So it's a relatively new technical indicator for us, but we've spent literally years perfecting the underlying basis for it, and it's performing very well. And this is the same technical indicator, the Cycle Finder Plus, that we use frequently throughout the day on intraday trading using 3 and 10-minute charts. But if you had taken all of those trades, there's 107 trades, you would have had 12 losing trades, 95 winning trades, and using a 30 delta, and we're just estimating a 30 delta because every trader uses a slightly different delta. You could use a 50 delta, you could use 10 delta, a lot of it depends on your capital commitment. But the total profit has averaged out to $282.40 per day. That's if you're trading one contract of those trades. So it's a pretty productive method with very limited amount of time required to attend to your trade.
And something to add about that win-loss ratio is that this is all based on an 80% win rate. And with us having 107 trades and 95 of them are wins, that's actually a true run rate of 88% win rate.
88%, yes, yeah.
Yeah, so it's better than the 80% win rate, which is exactly what it's supposed to be. It's supposed to be better than 80%, and that's what it is.
So we're pretty excited about that. And by the way, intraday and the people in the live trading room who follow the 3-minute, 10-minute crosses on the Cycle Finder Plus experience, a comparable level of performance and win. So it's a strong indicator that's part of a set of indicators that are all the profit flow analytics indicators by New Cycle Trading. And then I'm just including this here because I've been getting a lot of questions, more and more questions about the advanced spreads. Now, the reason the questions are coming up is because we've been using advanced spreads to help manage the portfolio, and help to alleviate some challenges we've had on some other positions. Let me just tell you, since the market sold off and then bounced, I mean, there's been just huge moves. And there were a handful of positions that we got caught with that we just were on the wrong side of the move. Well, if you're going to trade in that type of an environment, which we were willing to do, and we won on so many of our trades, for us to have a challenge with a handful of trades was to be expected, but we don't just walk away from those trades. Some people might choose to. That's your prerogative. We choose to manage those trades. And when I say manage, I won't get into explaining everything that means, but one of the ways that we manage trades is by using advanced options spreads, calendar spreads, diagonal spreads, market tamers. Those of you who have been in the live trading room with us for the last month and a half have seen us use market tamers on the S&P 500. You've seen us use diagonal spreads on Google. You've seen us use calendar spreads on Amazon. And we open a diagonal spread today on Shopify. These are by themselves good positions to generate great profits, but what we do is we align those positions with an existing position that is just challenged. So it's kind of a buddy system here where we want to overcome the drawdown or the loss of an existing position by sizing a position, constructing a position that will give us a profit to overcome that. Doesn't always work, but that is a very sound approach that we've been using for years, and it's all based on advanced option spread. So it just gives us more options available for management. You can use these strategies on stocks, ETFs, or indexes. Weekly or monthly expirations are effective. They have a lot of flexibility on them, and they can be opened and then closed using an automatic good till canceled order. So I just wanted to put that out there because gotten more and more questions about them. Some of you have followed right along with us as we've been using these to manage positions, and if anybody's interested in learning more about the advanced spreads, you can go to www.optionsmoneymaker.com/advanced spreads. There's a course that is available that teaches you, I think it's 5 one-hour sessions that teaches you everything that we're doing with these advanced spreads and how to properly select them and use them. All right, we're going to switch to questions now. I'm going to jump to chart. There we go. Just going to put a chart up here in case we want to refer to that. There we go. First question goes to Bill. Bill's asking, what would the average or approximate cost of these 107 trades be? Recommended capital commitment to utilize the one contract example. Thanks again for all you do. Well, we appreciate you being here, Bill, and we appreciate your gratitude for what we strive to provide. So there's 2 parts to your question, really. What's the approximate cost of these 107 trades? Well, as you can imagine, if you're trading NDX, it's much more, and let's just level set and say everything was a 50 delta, which means it's right at the money. If you're trading NDX, it's very expensive, and it might not be something that you want to spend. If you're trading Shopify, it's much more affordable, and you might want to go right at the money. So the reason that we talk about the variable nature of deltas is because each individual trader needs to decide what your comfort level is in terms of capital commitment. Now the reality is what we're showing are all of the positions that presented a cross and what the performance of those are. I think as an individual trader, you're going to have to do some filtering unless you're completely comfortable taking every single trade, no matter what the cost basis is. But that's not generally my experience with individual traders. So here's a way to think about it. If I was looking at a very expensive option and it's uncomfortable for me in terms of my choice of capital commitment, my desired capital commitment, then what I would do would I'd be going further out of the money, further down the chain, and I'd be looking for something with a lower delta. When we look back in history, we're going on now a year and a half. When we look back in history, we know that the movements are generally much greater than the 80% win rate. So let's just say, for example, that on a stock, in order to achieve an 80% win rate, you have a profit target of about 6 points, a sweet spot of about 6 points times your delta, okay? So if you have a 50 delta, that'd be a 3-point profit. But on NDX, Aaron, do you know what it is offhand? I think maybe 40 points.
42.
42 points, all right? So what that means is that from January 2019 forward, that means that if you were looking for an 80% win rate, NDX, the underlying index, will move 42 points 80% of the time or more. So if you're uncomfortable with a cost basis, then you might even go out to a 10 delta. A 42-point move at a 10 delta might give you $4.20 a profit, and on one contract, that's $420. So the gist of your question, Bill, is not easy to answer because the cost basis of these positions is all over the board, and the variable is what each trader decides they are willing to commit to that particular trade or entirely. If there were 3 crosses on one day, you would have to decide, are you interested in putting on all 3, and are you comfortable with the level of capital that would be required? So the amount of capital that you commit is a personal choice, and it has to be based on what your personal risk tolerance is. You can control the amount of capital by how far out of the money you go and how far out you go expiration wise. But on the PSSM, which is the profit sweet spot matrix we use to track this data, we also track what the average cycle time is. So you don't need to add excess cost to your positions by going out 3 months because you just think you got to buy a lot of time. You can literally look at the PSSM and go, well, this has an average cycle time of 5 days, which means that from January 2019 forward, the average time in trade was 5 days. If I looked at that, I'd be going out 1 week beyond that 5-day mark just to give myself a little cushion, and that's where I'd be opening my trade. If that's still too expensive at the money, I would go down to a 40 delta or try a 30 delta or 20 delta until I get something that's comfortable. Bottom line is, you can control your capital commitment and you can still participate in this opportunity trading one contract.
David's asking if you can talk a little bit about picking the strikes for managed positions. The example is the Shopify position we put on today.
So Shopify, I was looking for a couple of things, David. First of all, when we pick spreads, we're looking for a directional bias. The exception is when we have a market tamer. If we're going to open a market tamer, it doesn't really matter to me that much what the chart is showing. I prefer to open a directional bias spread, which would be a calendar or a diagonal. And so that's what I would prefer to do. And you made the point here that Shopify daily is in the sell zone. So we opened a put diagonal because when the Cycle Finder Plus is in the sell zone, even if it's not specifically crossed down, but it was crossed down when we opened it, but even if it wasn't specifically crossed down, the bias in the near future is that you'll have some sort of a movement lower. That's just because of our experience with Cycle Finder Plus. So as I was scanning through stocks and indexes today in our watch list, Shopify caught my attention because it was so high up in the sell zone. Closed today at about the almost 91% range. So that tells me, first of all, that I want to buy to open a put. So I bought to open a put, but I know that I want to create a spread, either a calendar spread or a diagonal spread. And the reason is because what I'm looking for is a high degree of leverage in a short amount of time. So when I sell to open a leg against a leg that I buy to open, that leg is going to have rapid time value decay and can potentially give me a significant profit that I can use to offset risk, drawdown, or losses I have on another position. And those of you in the live trading room know that we have, just a handful of positions that we've been managing. We've been knocking them off one by one through this method of management. We had a Google position that we managed. Actually, the original Google position was a loss, and we managed that loss away, and it resulted in an overall profit. We have a Netflix position, had a Netflix position that had actually a full loss to it, and we managed that away as of today. So that's what this is used for. So in choosing the strikes, David, I generally like to start at the money for the long leg. I like to start at the money for a long leg and evaluate the cost basis of a diagonal spread. Now, David, I've been trading a lot of calendars because you've been following along with me in some of those. But I default to a calendar when the diagonal is a little more expensive than the capital that I want to commit. I prefer a diagonal because if I buy to open at the money and I sell to open out of the money, and the price starts moving favorably for my position, in this case moving lower, my long leg immediately starts to add intrinsic value. Before we ever get to the short leg, and so I'm adding intrinsic value to the long leg, and I'm experiencing benefiting from time value decay on the short leg, and so those two things working together can make for a very profitable spread, diagonal spread. So today we ended up going out of the money just a little bit to the 735 put on Shopify, and we went out to June. When I'm trading diagonals in particular, I want to have a full month to expiration for the long leg. So in this case, we are basically right at expiration of May, so I went out to the June monthly expiration. And then I came back, and I want to be as close as I can on selling to open the short leg, close as I can be to current to today, right? So maybe 1 week out. And I was able to go out to Friday of next week. So it's essentially 1 week and 2 days of trading. And I was able to sell to open the 690 put. Now, the reason I chose the 690 was because it gave me a very reasonable delta ratio. The difference between the long delta and the short delta means that if the price moves lower significantly, very rapidly, that the position overall is gaining at the rate of about 20 delta. I think the delta ratio is about 20 on this one when we opened it. So go out a month on the long leg, go out a week, week and a half on the short leg. Short leg is going to experience rapid time value decay, and the long leg won't experience that much time value decay in the next week. And if we get a move lower, then we get the benefit of that delta value increase on the long leg while the time value is decaying on the short leg. One last thing about that, David, is if I had felt that the cost basis of this position was too great, I would have converted it to a calendar spread, which means I would have bought to open the same strike that I sold to open, but still using June expiration. These positions are all constructed to benefit from rapid time value decay in the first week, week and a half. And Aaron, on the Google position that we took action on today,
Yes,
do you recall what was our original credit on the short leg?
$12.
And we closed it today for $1.70, I think it was.
I believe so.
Yeah. Okay. Yep. I'm looking at it now. So, yeah. So we took $12 of credit. We closed the short leg for $1.70. So we had a really nice profit there. But we didn't just close it and then leave the long leg alone. We actually sold to open a new long leg, pushing it 1 week further out, and took in another $13.80 of credit. And
Took a profit and reduced our risk.
and reduced our risk overall. And we're still holding the long June put, which is a June expiration. The Google put, which is a June expiration.
And we'll see where we're trading tomorrow. We closed right at the money of the short leg, but we still had $27 of time value. So our time value ended up going up on that after we opened it, but there's still $27 of time value, and we're also seeing intrinsic value on the long leg.
So we hold the 1350 for next week.
Yes.
We're short the 1350, and you can see that Google closed today basically right at, just below our strike, and in post-market trading it's slightly higher. So we had a big move down today. I'm not concerned about that short leg being in the money. At close today, it was in the money by 67 cents. Not a concern of mine. Now, if we'd gone significantly lower, we would have had to take action, because you're always at risk of being exercised on American style options. But that wasn't a risk for us that close to the money. All right, great, David. Thank you. Jinky, we are not legging in to the diagonal spread. When we opened the diagonal spread on Shopify today, we sent the order on one order ticket, where we bought to open the June 735 put and simultaneously sold to open the May 22nd 690 put, and we submitted the order for a net debit of $44.88. That's what we got filled at. So we're not legging into these. There's a whole different strategy of legging into spreads that we teach, which is actually a great way to day trade without being a pattern day trader. We teach that also. Randy's asking, did we talk about the Tesla positions that expire this week and how they'll be managed? So in the live trading room, we did mention that first of all, the Google position that we held was intended to manage Netflix, and it did that. And now we have a second round of potential profit from that same Google position for next week, which we are looking at to help offset the loss that we're going to experience on Amazon and Tesla this week. So there'll be a disconnect in terms of when the loss is reported versus when the profit to offset that in the portfolio may be realized. But what we have in place right now, Randy, with the Shopify position and the Google position, those are intended to provide maybe not all yet, but some coverage for the drawdowns on those positions. And we'll let you know in the live trading room, where we're assigning those profits. And I do want to say, those of you who've been following along, I certainly have a lot of respect for you following along with us as we've managed some of these positions. We actually got caught with more positions than I ever would have wanted to, that we needed to manage. But then, you just You just do what you need to do, and you don't get crazy. You assign the right amount of capital. And one good rule of thumb here is if you have a position that is challenged and you're going to use a diagonal spread, a calendar spread, or a market tamer to manage the risk, loss, drawdown on that position, you want to size your position, the new position that you're opening, in our case like our Google or our Shopify. You want to size the position so that the short leg, or short legs in the case of market tamer, will be able to fully compensate for the position that you are managing. And if that is not reasonable based on the amount of capital that would be required, then assign a portion of it. I'm kind of drawing a blank right now. Maybe Aaron remembers. We had a position that we were actually, I think it was a Google position. We were knocking off
Yes.
contracts, one contract at a time. We were opening spreads and taking profits, and we would take those profits and we would close out of one contract of our Google position until we actually got to a point where we closed out of all of the contracts of the losing position and ended up net positive when you took into account the positions we had opened to work through those. It was Google, right, Aaron?
Yes, it was. Yep.
So I hope that answers your question, Randy. We've got two positions in play right now, Shopify and Google, and we've got Tesla and Amazon positions that need some management. So that's what we're working on. There's been some really great trades intraday. The Cycle Finder Plus indicator has been great at signaling a trend reversal. Michael talks a lot in the live trading room also about divergent bars, bearish and bullish divergent bars. And when you look at Cycle Finder Plus in conjunction with the Divergent Bar, it can be a home run. I'm not guaranteeing that it is a home run. I'm just saying it can be. So one of the ones that I noticed today is NDX on the daily chart had a divergent bar yesterday. And a divergent bar is simply where a bearish divergent bar is where the high of that day's bar was higher than the prior day, but the close of that day's bar is in the bottom 50% of the day's range. So yesterday was a divergent bar, but we didn't have a cross on Cycle Finder Plus to the downside on NDX yesterday. It crossed midday, but it wasn't one of our daily crosses because we're only looking for those at the open of the market. So today we were prepared at open because it looked like it was going to be a cross today, and it was right on the heels of a divergent bar. So today NDX opened at 91.2370, 91.2370, and traded down to a low of 88.90, 88.90. So
Is
when
that
Aaron,
enough for 42 points?
yeah, when Aaron mentioned that the sweet spot is 42 points, well, if you traded even a 10 delta, that's $4.20 of potential profit on trading just one contract.
SPX had a cross today too. I don't know what the high and the low were, but the SPX sweet spot's 13.
And it opened at 28.65.86 and trade down to 27.93. So it's about 72 points.
All I know is both of those trades you were in and out of very quickly this morning.
Well, I'll just tell you, when you see a divergent bar lined up with a cycle finder plus cross, there's no guarantee, but it's a great signal to trade. Folks, just let us know if you have any other questions, comments. I don't see any other questions out there right now. Aaron, do you have that song prepared?
I thought Michael was doing it.
No, I thought tonight was your night to sing. Well, folks, I don't see any other questions out there. Sometimes there aren't as many questions as there are other evenings. We'll just hang on here for a couple of minutes. And, oh, there they are. Let's see, David's asking, how are we doing on the rollout of the enhancements in the Divergent Bar indicator? So there's two levels of Divergent Bars that we're ultimately going to be offering. One is already out there. You've had an opportunity to download that, and that's the Divergent Bar and fractals printing on your price bar. So you can see those every day. The Divergent Bar methodology actually filters out some divergent bars that if you just looked at the bar, you know it's a divergent bar, but behind the scenes, it's all tangled up in a whole series of moving averages that just says this is not a trade that you want to take. The next level of divergent bar is one where the divergent bar is going to print right on the Cycle Finder Plus. And you'll be able to choose to use that version or the one that you currently have. And we're having a meeting this week with New Cycle Trading and Analytics to kind of go through the final settings and criteria for the new Cycle Finder Plus Divergent Bar version. So we'll let you know, but you do have Divergent Bar available to you on the price bar. Gerard,
And that's a free, I'm sorry.
Go ahead, go ahead.
That's a free indicator available to anybody that has Trading View. You can email charts@newcycletrading.com if you're interested. If you don't have it already and you have Trading View, the Divergent Bar and fractal indicator is a free indicator available from New Cycle Trading.
Gerard, we've been working on that pretty steadily, just taking much longer than I had hoped that it would. So appreciate your patience on that. Wayne is saying legging in and locking in. I'm not sure what you mean, Wayne.
The legging in to lock in a profit to avoid pattern day trade.
Yes, yes, yes. So we have a strategy that we've taught and use extensively to help people who might be trading smaller accounts and they're limited by pattern day trading rules, where you can buy to open a put, and then using the right criteria and the right rules on a movement where you would normally be closing that trade. You can buy to open a call or buy to open a put. When you would normally be closing that trade, but you're prevented from doing so because of the pattern day trading rules, you actually create a spread. You sell to open a leg against it, and that effectively for the rest of that day and then tomorrow morning locks in the majority of your profit. Sometimes you're going to close the next day and have slightly lower profit than you would have had if you just closed it. Other times you're going to wake up and the market has moved aggressively further favorably for you, and so your spread continues to gain. But it's a great strategy for anyone who is concerned about pattern day trading or thinks that they're limited because they have a smaller account. There's really no limitation there. You can properly learn how to do that. Brahma, so thank you for participating in the masterclass. That's awesome. Started going through the videos. The calendars and diagonals is a different training curriculum. The masterclass is geared all around the charts, the technical signals, and in particular, the Cycle Finder Plus. It's geared around the profit sweet spot matrix and everything that you need to be successful in active trading using the profit flow analytics charts and in particular the Cycle Finder Plus. The training for the calendars and diagonals and market tamers is a separate curriculum. And you can reach that at optionsmoneymaker.com/advanced spreads. Wayne, what I'm referring to when you're legging into a spread, it has nothing to do with pattern day trading. There's no violation for pattern day trading. I've had people who have traded $5,000, $10,000 accounts. They open a position. It hits a point where they would want to lock in a profit, and they're selling to open a leg against it to lock in that profit. Jack, I am not certain about that. Jess is asking if on TradingView you could set up an audible alert when a divergent bar appears.
Yes. Yes, that's the answer.
That's why I was hesitating. Aaron was going to jump in and answer that.
Yes, you absolutely can. It's the same way you can right-click on one of the triangles on there and add alert. And something to note about it is if you choose once per bar, it's going to show up the first time it flashes on, which we know that sometimes based on the price movement of the bar, it can go away, so it can be invalidated by where the price bar closes. So if you want to know and only be alerted when a valid divergent bar prints, then you want to put the alert setting to once per bar close.
Joseph, I'm not sure if Michael comes back. We'll ask him if he has price level targets on ES. He was called away and he's not available right now. Robert, your divergent bar is on daily chart NDX or SPX example. I'm not sure what your question is, Robert.
We're showing them right now.
I was showing the daily chart. There was a divergent bar on the SPX daily. And there was a divergent bar yesterday on the NDX daily. Yeah, thank you, Craig. Appreciate that.
Robert, are you asking what they are? We could point out exactly the divergent bars for you. The blue triangles are bullish divergent bars, and the yellow triangles are bearish divergent bars. What a divergent bar is for a bearish divergent bar, it's when a high is higher than the prior bar's high, and the bar closes in the lower half of the bar. And a bullish is the opposite. The low is lower than the prior bar's low, and it closes in the upper half of the bar.
And Robert, having them on your chart just makes it so much easier to visually spot them easily. And when you see them print, and particularly when there's an alignment with a Cycle Finder Plus, it can be an excellent, excellent signal. Now, Cycle Finder Plus all by itself is a great signal, but when you pair it with a diversion bar, it's a pretty strong signal. And then periodically you'll see multiple diversion bars print, but there's a great approach that we talk about in the live trading room that Michael talks about on short-term trading. For example, on 3-minute and 10-minute charts, where you really, there's a rule that you have to follow to properly trade the divergent bar. And there are some divergent bars that you'll actually never enter in on if you follow that simple rule. So Michael talks about that every day in the live trading room. All right, folks, we're going to go ahead and close out. I just want to say sincerely, I appreciate this team here at Options Moneymaker, Michael, Aaron, and our friends at New Cycle Trading and Analytics. Craig is just phenomenal to work with. And I appreciate all of you who devote your time to come here committed to learning. We have strived very hard over the last many years to build a set of tools and a set of training curriculum that will help you achieve what you want. Our motto is learn to trade and then trade to earn. And if you immerse yourself in learning, it's going to cost you a little bit of money, it's going to cost you a little bit of time, it's going to cost you a little bit of aggravation, but if you devote your time and attention to learning, then you think about the current situation that our economic world is in, and I'd like to think that you have a little bit more control over your ability to generate some income. You sit down with a computer, with your friends here at Options Moneymaker, New Cycle Trading, Michael, Aaron, myself, Craig, and we want to help guide you to a point where you could actually generate an income no matter what else is going on around you. I'd like to believe that we could help people do exactly that. Been a lot of people that have been put back on their heels don't quite know what they're going to do, don't have any idea of resources that they can go to other than what's being given to them right now. So um, we are here and we would love to help as many people as we can. And we appreciate each of you being here. So thank you, thank you, thank you for being here. Have a great evening, and we'll be back to trading again tomorrow morning. I just want to thank Wayne for his comment. Wayne, that's just so very kind of you. Wayne just says he purchased Options Moneymaker Service, bear witness that all the material is really the greatest in educational excellence ever. That that just means a lot to me. It means a lot to all of us. Thank you very much, Wayne. Really appreciate it.